Well, India's tech basket has taken a bit of a beating of late, especially. And obviously, we do know that India's tech basket was in any case slightly overvalued. And that has been the trend across the world. We have seen several tech names take a bit of a beating across the world, across indices in various countries. However, today let's try and break down the India story, the India tech basket story. Well, when we look at each of the tech names versus their 52-week highs, they have seen quite large declines. Well, Zomato, to start off with, that was one of the first tech listings, down from its 52-week high almost 44+%. When we look at it, it was at its 52-week high at 169 rupees a share, and currently it's trading in the 90s, and that means in the mid 90s, and that means it's down 44+%. When we look at Nykaa, which is a profit-making tech stock for at least for India, and that means that at least it should be slightly better valued than some of the other tech names, and despite that, it's down 33% from its 52-week high. Mind you, Nykaa listed itself at almost double its IPO price, so it had doubled investor wealth, and then it further went on to clock its 52-week high at 2574 rupees a share, and post that it's down to around 1726 broadly. That is a 33% decline versus its 52-week high. Even PB Fintech, which owns both Paisabazaar and Policybazaar, is down 40+% in trade versus its 52-week high of 1470 rupees a share. PayTM has been a unique case. It's been in the spotlight since a while. IPO price of 2150 rupees a share. It has traded at its highest on markets, on indices, or on in markets at 1961 rupees a share, not even touching its IPO price. And currently it's trading 52% lower than its 52-week high on exchanges, which is at around 950 odd. When we look at the other two names, which is Cartrade and MedPlus, well, Cartrade has seen a far lower value erosion in comparison to some of its peers who we've just mentioned and spoken about. It's down around 11% from its 52-week high, but Cartrade, well, it's down almost 60% as well. So pretty much, competing against the likes of PayTM. Cartrade is down 60% versus its 52-week high of 1610 rupees a share. But broadly, what are the reasons for this? Of course, one, we did speak that they were valued in any case on a slightly higher side. But the other two key factors that we're looking at is profitability. Of course, profitability for most of these companies is questionable, except Nykaa, which is held by FSN e-commerce, which is a profitable technology company. And the other thing is bond yields are continuously going up, and that means that tech stocks will continue to be beaten. Of course, going forward, we need to factor we need to understand as to how investors are actually looking at this. Is a large part of the bond yield increase already factored into the price or not? But that only time can tell. So broadly, these are the trends playing out in India's tech basket.